Welcome, traders. Welcome to this session of the training. So, in this session, I will be speaking briefly on directional bias. Directional bias. That's what I'll be talking about in this video, right? So, it is very, very important as a trader, whether a day trader, a swinger, or let's say scalper, for you to know the direction of the market, and you should make use of that advantage to trade in that same direction of the market. If market is heading south, you should know that it is going south and you will be going in the same direction of the market. That's why there's a word that traders usually say trade with the trend. Trade with the trend. So it's very, very important for you to know the direction of the market, and you could use this as an advantage, right, to trade with the trend of the market. So that's what I will be talking about in this video. Directional bias. Directional bias is just for you to going up to higher time frames and knowing the direction of the market. What is your bias? Some you might go on a chart and your bias or your sentiment might be bullish sentiment, or it might be bearish sentiment, right? And you should know that you should be taking trades. If it's bullish, you should be taking trades that aligns with your bullish sentiment or your bullish bias. If it's bearish, you should be taking trades that aligns with your bearish sentiment. For example, I'll be using the USD JPY pair to explain briefly what directional bias is, or how you could analyze your chart and how you could know the directional bias of the market. For example, this is a 4-hour chart on USD JPY. This is a 4-hour chart on USD JPY. You could see price breaking structure. You could see the recent market structure of USD JPY just from this zone like this place like this. You could see the recent market structure, right? You could see markets breaking highs. You could see markets making higher highs and higher lows, higher highs and higher lows, higher highs, then a low also, right? You could see in the chart now, that's what USD JPY is currently printing. So this higher high here could be traded in the market, right? This higher high could be traded. But looking at this chart, you see price making higher highs, higher lows, higher highs, higher lows. Whenever price makes a higher high, it comes back to a particular zone and react from it, either a zone or a key level. A key level is simply a place where price has previously maybe reacted from, or a key level can be an higher time frame breaker block, order block, or even fair value gaps. So you'll be looking at these things, at these three concepts, these three points of interest, whether price triggers it in the higher time frame, then you go down on the lower time frame and look for your entries. All right, I want to show you how I took some few trades by me just knowing the bias, my bias in the market. All right, you could see price broke this high here. Price broke this high and pulled back to this zone, Immediately price pulled down to this zone, it also what broke this high. And this other one, you see trend line liquidity forming here. And that's very, very what you should know, that whenever you see trend line liquidity in the market, that at some point in the market, whenever price triggers a key zone or a point of interest, higher time frame point of interest, that price is definitely going to go what take it out, right? So you could mark your recent range in the market. For us now, our recent range in the market, a range is just the high, the current high and low of price, current high and low. You could see that this particular place, price broke structure to the upside, came back here, and price broke structure again. Then price later came back, cleared some liquidity that was here. So this is more likely a liquidity. So price cleared it and mitigated a higher time frame order block from this side. So our current high and low for our 4 hours is that this high, this place here is our 4 hours high. It's also called external range liquidity. External range liquidity. So meaning if we start taking trades from this side, we'll be targeting here until we get to this side. We will keep buying till the price takes out this external range liquidity. All right. So price triggered a point of interest from this side, which is an order block, and what started what clearing out this trend line liquidity. And definitely price is going to clear it out. It might not be now, it might be after a month's time, it might be after 2 months, but price will definitely clear it out, right? So our recent range now is this high and this low, because some of you might be saying, but price, this particular one broke structure. Why don't you say this side is our range also? That's this place is our low and this place is our high. The reason why we don't call this our range is because price invalidated this side. You could see price came down, swept liquidity here. So price broke this low, invalidated it. So this is no longer our low. This is our what? Valid low, since price wasn't able to break below this. So this is going to be our low. It's very, very good for you to know the range you are trading. The range. You need to understand range very well. So the range you're trading in between is between this low and what this high. So these are 4 hours range. So market came down. You could trade this in the market. Actually, 4 hours is bullish, right? But whenever price, you understand market structure, that whenever price makes a high like this, higher high, it will definitely pull back to a certain point and what go back again, continue its uptrend, pull back again, break structure, pull back again, break structure, and pull back. It will continue doing this in direction until what price what breaks the last low and still pull back to a particular point of interest. Then we could say what price has what shifted what we say price has shifted bearish. But in this case, price hasn't shifted bearish because it keeps breaking structure to the upside. It only swept liquidity in this low. So as price broke this last high, price started what pulling back. Price started pulling back. You should know that price is definitely going to what pull back to a particular place, but you don't know where price is going to pull back. So what are you going to do? You start marking zones in the market. You start marking places you think price could pull back from. Are you getting it? So you see this particular zone here. This is an order block. You mark this zone and what you wait for price. You start selling. Look for a change of character or a market structure shift. If we go down to our lower time frame now, you could see that this downtrend is tradable. you could see that price shifted structure and started what? Pulling back. That was how we caught all this internal trade. All right, let me see whether I can show you. See this trend line I drew, right? Something like this. This where it began from. You could see what literally happened here. You could see that price was uptrending. Price broke this high, came back to this low, went up, and what did price do? Price did something like this, and what? Broke this low. Price broke this low, right? Price broke this particular low. Immediately it broke this low, it what? Pulled back to this side, then came here and what? Came to mitigate this order block, more like an order block before what? Going down. So that's how price will keep going down and giving you opportunities. You start looking for break of structure and market structure shifts and closest point of interest to liquidity, then you take the trade. So that's why I told you that the downtrend, sorry, the pullback of the 4 hours, it is tradable. Since the 4 hours is pulling back, it means that you will be looking for sales in the market. But you know that the sentiment of price is bullish. That is, your directional bias is bullish. But since it is pulling back, you will be what? Looking for sales in the market. So that was how we kept looking for sales in the market, kept looking for sales in the market till when price was approached that higher time frame point of interest. You should know that the lower time frame are always trying to align with the higher time frames. All the time frames are trying to align with themselves. So higher time frames are the most what? Valid time frames. Not that the rest time frames are not valid, but higher time frames are the most valid. You see, immediately price swept liquidity from this side, it mitigated an higher time frame order block here. And what did price do? Price what? Shifted structure and what? Started what? Going up. So immediately price mitigated this particular point of interest, which is an order block in the market. You could see that I started looking for buys. I started looking for buys in the market. So that's how simple you could know the direction of the market, your directional bias in what? The market. That's how you could know where price is heading to and where price is coming from and where price is heading to. You already know that we are most definitely going to take out this external range liquidity. That price is going to what? Be bullish, although we might have some little sales in this particular market, but price is very, very much bullish because price hasn't broken this our range, this our low here. It is when price breaks this low that we start saying that price is bearish. When price breaks this low, that's when we know that price is now bearish on the 4 hours. Then we could be looking for sales in the market. I hope you understand this simple analogy. All right, let me see if I can see something. All right. See, after price mitigated a higher time frame, zone from this particular place. This is where it mitigated the higher time frame zone. It shifted character and broke the last high. This is the last 4 hours high. It broke it, pulled back, came back to this zone, mitigated it, broke another structure, came back to this zone and mitigated. That was when I took this particular buy. That was when I took this particular buy. That was when I took this particular buy. See, market swept liquidity here and bought to the upside. I opened another position at this particular place. So that's how you could trade with the trend. You should know your directional bias, analyze your chart, and know where price is coming from and also where price is heading to so that you can use it to your own advantage. So this is just a brief on directional bias. I'll see you soon. Take care, guys.